Welcome to The Explainer, where we're breaking down the story behind the numbers. Today, we're looking at Autodesk. Now, the design software giant just dropped some stellar earnings, but they're also planning a massive, pretty costly shakeup. And the story behind that twist? Well, it's all about a huge bet they're making on AI.
So if you just look at the surface, their latest earnings report looks like an absolute home run. I mean, the company just closed out its fiscal year on a major high note with some really fantastic results, all around.
They beat Wall Street's expectations on both revenue and profits. Top line, bottom line, it's pretty much everything you'd want to see from a healthy, growing company. You can't ask for much better than that.
But here's the twist. If things are going so well, why on earth is the company also talking about a major restructuring and warning of potential disruption in the coming year? It seems totally backwards, right?
Okay, so let's really dive into this, because the answer reveals a massive strategic bet that Autodesk is making on the future of its entire industry. You know, it's that classic story of a little short-term pain for some serious long-term gain.
First up, let's just take a moment to look at how strong the end of their fiscal year really was. The headline numbers? They're genuinely impressive.
In just the fourth quarter, they pulled in nearly $46 million more in revenue than the analysts were predicting. And that is a significant beat.
And it wasn't just about revenue. Their earnings per share, which is a really key measure of profitability, also came in 21 cents higher than everyone expected.
Now, what's really interesting here is the billings number, a 33% surge year over year. So why does that matter so much? Well, billings represent money that's been committed for future services. It's this incredibly powerful indicator of future revenue, and it shows massive confidence from their customers.
So where is all this growth actually coming from? It's not just one thing, which is what makes it so interesting. It's a really broad-based strength across their whole portfolio.
This growth is really being fueled by some major wins with huge names across all their key industries. We're talking top real estate developers, global engineering firms, data center builders, big pharma, and even major automotive manufacturers. They're all consolidating on Autodesk's platform.
All right, so now let's get to the part of the story that just doesn't seem to add up at first. Amidst all of this good news, there's this really deliberate, almost cautious tone about the year ahead.
And this brings us right back to that key question. With business booming like this, why on earth is Autodesk being so conservative with its forecast?
The first big clue is right here. A restructuring charge of around $100 million. Now that is a lot of money to spend intentionally shaking things up inside your own company.
So according to their CFO, this isn't a sign of trouble at all. It's a planned pivot. What they're doing is optimizing how they sell and market their products, all so they can focus their resources on one huge strategic shift. And what is that big strategic shift? Well, it's all about a concept they're calling agentic AI. So, what in the world is agentic AI? Okay, think way beyond chatbots or simple little assistants. This is about AI systems that can actually participate in the process of designing, making, and operating things in the real physical world. It's an AI that understands a goal and can independently figure out all the complex steps it needs to take to achieve it. Now, the company's leadership is really adamant that this is not some sudden reaction to all the industry hype. They see this as the end result of over a decade of deliberate preparation, of building the data and the platform foundation needed for this exact moment.
But let's be real for a second. Everyone is talking about AI. So in a world that's just flooded with hype, how does Autodesk actually plan to win? What's their unique advantage, their secret sauce?
Well, the CEO argues they have three key advantages that create this really powerful competitive moat. First, unique data. We're talking massive amounts of real-world 2D and 3D design info that general AI models just don't have. Second, industry context, a deep understanding of the physics, the regulations, and the workflows of their industries. And third, specialized expertise, a team they've been building for nearly a decade focused specifically on 3D AI.
And this single quote, which the CEO actually repeated multiple times on their earnings call, just perfectly captures their confidence. It's a direct statement, saying they believe they have that unique combination of ingredients to completely dominate their industry in the age of AI.
Which leaves us with a final thought to kind of chew on. What we're witnessing here is a highly successful, very profitable company intentionally creating short-term disruption and spending $100 million to do it, all to go all in on its AI future.
You know, this might just be a preview of the difficult but maybe necessary pivots we're about to see from successful software companies everywhere.